Hi everyone, Paul here, Property Apprentice. I've had quite a few clients come to me asking around what my thoughts are around the capital gains tax. Does it look as though it might come in? What do you think of it, etc.? And also, we've recently had the Labour Party conference a few weekends ago, so I thought it'd be good to actually cover some of that off in a bit more detail and give some comparisons across the board as well. Now, one of the previous parliamentary ministers, Bill English, he actually said something that I thought was quite important. People who need housing and social support are more important than who owns the houses. And so it does make sense. If investors, these are sort of my thoughts, if investors were able to work closer with each government to supply the kind of housing that was required, for instance, multifamily, disabled people for housing, ramps, etc., wheelchair access, wet rooms instead of bathrooms, that kind of thing, that's exactly what we would provide if we knew exactly what people needed in different areas. We already do provide good, clean, healthy homes, and we abide by the Healthy Homes Law. So I think, you know, there's obviously always a few bad eggs here and there, but I think as a general rule, a lot of landlords have met all requirements now. And if you think about it, it's actually difficult for a government to effectively be a landlord. There is a conflict for the government by being the landlord and the person responsible for chasing the rent, i.e. the property manager. For a government to chase up rent arrears or address destructive tenant behavior is a bit of a social conflict for them. And that doesn't matter which government it is. So basically, the government is a bit of a dysfunctional property manager who likes to, doesn't like to stir the pot with the tenants. So as currently Kanga Ora tenants at this point owe the government $16.1 million in unpaid rent. Now, this is actually way down from a year ago. So the current government, the National Coalition, has actually pretty much has got that down from over $20 million when we had the last government in place. So I think that obviously it's hard for any government to manage that, but it is taxpayer funded money and funded tenants, but they are doing the right thing and trying to get it back. But as a landlord, they're not efficient. No government, because having a debt of $16 million against your rental properties, isn't great. So it's not an easy issue. The government currently houses 200,000 people. That's approximately 78,000 properties. The total value on those properties is about $42 billion. The problem is the government doesn't act like a private landlord. It's not focused on value for money either for the taxpayers or the tenants or the government itself, and it is making a massive loss. Whereas private landlords do a much better job and provide, in the most cases, a better option for tenants and sometimes a much better standard of property. Now, on the other side of the hand, we've got 120,000 private landlords in New Zealand who own 550,000 properties, which is around about 85% of the whole rental stock. The rest of it, 15%, is the government. The simple and obvious fact with private landlords is, what will any government do? No government, regardless of their makeup, intentions, can afford to suck up even 10% of privately owned properties, let alone all of them. So imagine if with a capital gains tax, for instance, the Labour government, let's say 10% of property investors went, right, I'm out. That is 55,000 houses lost in the rental market. That would displace more than 140,000 people. Now, where do they go? Because the government doesn't have enough houses for those extra people. That's just 10%. Imagine if it was half. So most investors in property investors in New Zealand only own one rental. All they're trying to do is secure a better retirement because, as we all know, in the next 10, 20 years from now, the pension is going to be absolutely unaffordable because there are not enough taxpayers in New Zealand to pay for it. But that shouldn't be your goal, just depending on your retirement to be given to you from the government. You know, waiting all your life, you've worked, you've paid tax. There's got to be a better way, and that's why people invest. And you've got to invest smart. If you're allowed to work, then and you're able to take risk and provide for yourself, why shouldn't you be allowed to? We all take risks as investors. We all have issues. I've had houses that have been contaminated with meth. I've had a house that's burned down. Yes, it's hard. Yes, there's risk, but with no risk, there's no reward. So I do find it laughable that the current opposition government says that property investors it's an unproductive investment. We absolutely are productive. We hire property managers, builders, electricians, painters, carpet layers, accountants, mortgage brokers, insurance brokers, lawyers, real estate agents, valuers. We keep trades moving. We buy appliances, we buy paint, we buy carpet, we buy timber, curtains, blinds, and we supply quality homes for people to live in. Labor's capital gains tax will be a lose-lose situation for landlords and tenants. The proposed structure of the capital gains tax will absolutely not be the end, in my opinion. And by that I mean, once a new tax is brought in, which is the hard part, that can be changed very easily. And I believe within the first 12 months of that tax coming in, it will capture the main home. I think what will end up coming from it is it will be a full-blown capital gains tax across everything. Shares, KiwiSaver, property, home, batch, everything. So if you think that, and I think it's interesting that if the tax doesn't affect you, you're all for it. But when the tax does affect you, which don't have the blinkers on, it will absolutely affect you. That's when you're concerned about it. Because whether you rent or whether you just own a home, watch this space because it will blow up. Let's look what happened last time the Labor government was in. We had the removal of interest deductibility. We had the bright line test go from 2 to 5 to 10, or 5 for new, 10 for existing. We had $26 billion of overspending that now costs us $1.5 billion each year just in interest costs to keep going. What did that do? So let's think about 2020, came out of pandemic, 2021, interest rates went through the floor. It pushed up property values. Rents increased to a point that they have never increased so fast, so quickly. And everybody remembers the amount of tenants that were in hardship and couldn't afford to keep up with the rents. But it's user pays. People cannot suck up a loss. They will either, as I said, 10% of the people might sell, and then where do those people get housed? If you have to pass on the cost, just like if oil goes up and you're buying petrol, it goes up at the pump, right? There's no way around it. So I remember there being stories of tenants queuing up for properties. I remember there was one in Hamilton, and they did an open home for the rental, and there were 77 people applying for it. It was on the front page of the Herald. So don't forget to think back of where we were. Also, having a capital gains tax doesn't allow for inflation. Now, as more than half of the capital gains in housing over the last 10 years has been because of inflation, more of that growth, largely caused by government overspending, people can clearly see that causing inflation and then taxing people for it simply isn't fair. Even some of Labor's own voters know it's wildly unfair. And don't forget, this is the same person who said there will be no capital gains tax under any government that I lead. Yeah. All you need to do now is think about current government structures that we have in Australia and the UK, both Labor governments. When they came into power, they both promised they would not increase taxes, they would not increase income taxes, capital gains tax, anything at all. That was Keir Starmer in the UK and Albanese in Australia. Now, this week just gone, the Chancellor, the Finance Minister of the UK, is asking people with the broadest shoulders to carry the load. This is going to, in effect, because they're not changing the tax thresholds on incomes, which they're supposed to be doing, which they lobbied when they came in that they would do, it's actually going to put most families, middle income, lower income, high income, in debt of about £5,000 or more per year. And they've also put a mansion tax on property over £2 million, which is, yes, that's $4 million, but that is most of London. And, that is another tax that they brought in. But where I find this is unfair across the board, whether we're looking at New Zealand or Australia or the UK, is our GST. Because we pay 15% GST on everything. Food, cars, furniture, you name it, we pay GST. In the UK, for instance, it's VAT instead of GST, but there's a zero rate of VAT on the basics: food, newspapers, books. There's no VAT at all. Passenger transport, children's clothes and shoes. There's a reduced rate of 5% on domestic fuel and power. Then the standard rate, which is 20%, not 15 as we have here, is on everything else, which covers around half of consumer spending. So for the remaining other half, 50%, you've got 20% VAT, but then the other 50%, you may have little or no VAT. Now let's look at Australia with GST and their capital gains tax. GST-free products and services. Most basic foods, education courses, medical, healthcare, products and services are GST, often referred to as exempt from GST. Now, their capital gains tax, that we're looking at a 28% capital gains tax. Now, if you buy a property and you keep it for a year, because if you're not keeping it for a year, you're speculating, and that's where I think there's another misconception from the opposition government, is they talk about property investors as speculators. No, that's somebody that's buying and selling, and you always pay tax on that because you're in the business of buying and selling. But if you're not a speculator, if you're just a property investor holding property for long term and paying those trades and the lawyers and the accountants every single year. But the GST in Australia, if you hold it for longer than a year, you get a 50% discount. So, for instance, if you bought an investment property for 500,000 Australian dollars, you spent, say, $20,000 on improvements, you sold it 5 years later for 700,000 Australian. After your accounting, selling costs, etc., your capital gain might be, let's take the $20,000 off, call it $180,000 difference. After a year, you pay capital gains tax on only 50% of that 180,000, which is 90,000. And that's added to your taxable income, whether your tax code is whatever. But even if your tax code was 38%, it's better to pay 38% on 90,000 than 28% on the whole 180,000. And the reason that they do that is simply for inflation. So let's get back to New Zealand. A note has been made by a New Zealand tax specialist where they said shifting the principal place of residence, the home, under the bright line test is actually called the main residence. Under the new proposed capital gains tax, it's called the family home. This tax specialist says this is going to cause headaches, as whether the family home is the same as the main home concept as in the existing bright line test. And this has not been confirmed yet. The proposed capital gains tax would not carry a 5 or a 2 or a 10-year limit. There's no time limit after the start date, which is the 1st of July 2027. So it would at that point wouldn't matter how long you own the property. It would cover all residential, all commercial properties, the bright line does not. The tax rate would not be the marginal tax rate like under the bright line test. It would be 28%, same as the company rate. And the capital gains tax would only apply from gains from the 1st of July 2027. Bright line test exempts your main residence, the one you spend at least half your time living in. The capital gains tax would use the term family home instead, which is actually open to interpretation. So one of the tax people from Deloitte actually said that proposed 28% capital gains tax rate is quite high compared to other countries. So if they say it's open to interpretation, if you travel for work and then you think about, I've been away, I've come back, I've been away, I've come back. Have you been in a house for half of the year? Maybe, maybe not. You could get taxed. And this is where I think there's so many grey areas, and I just don't think it's fair. A couple of weeks ago, there was an interview on Jack Tame, Q&A Sunday morning, I think it is, with the Finance Minister, Barbara Edmonds, for Labour. Now, how many people need their doctor's visits covered? And the response was 1 in 6 people. Jack's comment was, why are you committed to funding the other 5? Because the country is in a structural deficit due to the fact that Labor's capital gains tax has already been ring-fenced for doctors' visits. How will you reduce the deficit? The finance minister for Labor said it's all about choices, which means they'll have to cut other things or increase taxes across the board, like income tax. Because if they're saying capital gains tax is just for these doctors' visits and that's ring-fenced for that, there's no way of getting the deficit down. So they're going to be bringing in a lot more taxes than they're talking about right now. The other thing they mentioned at that conference was they're also committing to bringing back the pay equity claims, which the National Coalition has removed. That is $13 billion worth of cost. They also have said that they're going to keep ensure that the Paris Agreement is kept on track. And because New Zealand is such a small country, we can't offset as much as we need to. So we're going to have to buy credits from overseas, from countries that aren't doing so well. We'll buy their credits. And that's going to be to a tune of $2 billion. So that equates to, under the next Labor government, of $15 billion worth of spend in their next term. They've already committed that at the weekend. So how is it possible, other than borrowing more money or taxing the rest of us, to get $15 billion? And that doesn't even get health better or anything better. That's just, we're spending that, the rest will have to work out. But where are we going to get that 15 billion from? So by the end of that term, we could be in the hole for another $15 billion. If that does happen, people across the board, tenants, landlords, governments, all of us are going to hurt, because it's unsustainable. And that is a fact, because they want billions of dollars, and having the leader of the Labor Party say, we will sort out the details of this with the IRD after the election. Just trust me. Yeah, right. You just cannot. I believe that we're in the right place at the right time. The economy is definitely starting to move. We've been through the downside, and I know that government talks about, well, invest your money in something more productive. We do. We employ people. We do things to keep the wheels turning, but there's only so much you can do. People are trying to get themselves a more secure retirement, a more secure future, and not have to rely on a handout. The economy is starting to move. Values in property will move over the next few years, and I believe that we have the right government in place to do so. So when it does come to vote next year, do it on fact, not fiction. And it comes down to this: if I don't want to be told that I'm unable to provide for myself, I don't want to be told I can't strive for something better. I don't want to be told that I must conform, sit back, and take the punches. Yes, we've got to roll with the punches, but it's best to avoid the people that keep punching you. Thanks.